Welcome to another stage analysis video. It's Wednesday, the 30th of August 2023. I'm going to go through some of the mega cap stocks in this midweek video to begin with, before having a little bit of a closer look at what's been going on in the S&P 500 and some of its market breadth internals at the end of the video. But I wanted to start off by doing a little bit of a feature on some of the major stocks in the market, some of the glamour stocks, as Weinstein likes to call them, that obviously lots of people look at and which have such a major impact on some of the major indexes, such as the Nasdaq 100 and the S&P 500, with their obviously heavy weightings in those. So Nvidia, obviously one of the major stocks at the moment. It's been the liquid leader as such throughout its stage 2 advance since early in the year, since it broke out into stage 2 back in the latter part of January. So we're now 32 weeks into its stage 2 advance, and it's now moving into what we call stage 2B at the moment. Over the last 6 weeks or so, I think I've roughly mapped these out based on quarters. Weinstein doesn't give an exact way of processing the A and B stages within the sub stages of the stage analysis method. It's something that he just does by feel. So I've done a bit of a more of an automated way of doing it by using quarters. So the first quarter is what we call the stage 2A, the early part of stage 2. The second quarter is just ordinary stage 2, and then once you get to the third quarter and beyond, it's the later part of stage 2. So it's stage 2B. It's your typical stage 2 advance, generally only lasts from 6 to 12 months in the best of the stocks. So some obviously can go longer than that, but on average, you see the majority of stage 2 advances last for in that 6 to 12 month range, I would say, from my history of using the method over the last 13 years or so. So at the moment, we would consider Nvidia in stage 2B, as it's 32 weeks in. So anything past 26 weeks we're starting to get into the later part of stage 2. And because we have had a change of behavior recently, but it has started to form a localized base structure, which it could be attempting to make a continuation attempt from at the moment. But you can see we've had a buying climax, an automatic reaction, secondary test. At the moment, we have not cleared the secondary test. So we're in the phase A of a base structure at the moment, and it's its first significant structure since the stage 2 breakout back in January. So we have had obviously other more minor pullbacks along the way, but this is our first more significant pullback, but not significant enough for it to be considered stage 3A, the early part of stage 3 at the moment. It would need more of a change of behavior. It would have needed to drop further down towards that 30-week moving average, which we have seen in some of the other leading stocks. But we have obviously Nvidia held up very well. If we drop to the daily chart here, you can see it only had 3 days below the 50-day moving average here before reversing back up above it. And we did have a few more tests of it, but a very brief period below that was quickly bought up and then made a continuation attempt on earnings, which was reversed, and it hasn't yet broken above that. So this is what we call a significant bar at the moment. If I zoom in on this a little bit, we'll take it down to last 6 months, get a bit of a closer look on that price action at the moment. So this bar here was the earnings day. So you can see the reversal. It's came off around 10% into the 2-day reversal there. But the second day was much tighter. There was what we call some demand tails on these bars here that showed there was a big volume day on the day, but obviously couldn't push down very far and got rejected at the 21-day moving average and on the following day. So although there was heavy volume, it didn't make much progress to the downside. So obviously surprised a lot of people that were expecting this to be a top. So as then obviously what we call in the Wyckoff approach, we have something called the effort versus result, which is part one of the 3 tenets of the method. And so there was a big effort, but the result did not go with that effort. So it showed there was an opposing force there. There was a lot of demand coming in as well as the supply. So it managed to hold, and we've had a reversal back up, but it hasn't yet cleared the top of that range. So that 500 level remains key at the moment. We're still in secondary test land at the moment, so it could still roll over. We could still be forming a broader base structure. So we're going back to the daily chart here, the weekly chart. I mean, you can see this structure. As I said, it would be perfectly normal for this to continue grinding it sideways within this structure, tightening up within there, could even test the lower end of the ranges. That would still be perfectly normal behavior within stage 2. So, but if we do start to see some distributional characteristics appear in this structure, then it would obviously then be the signs, more further signs that it could be moving towards early stage 3. But if it can make a continuation attempt, then that would be a further sign of strength here, and the stage 2 would just be moving along as per normal. As at the moment, though, it's obviously in a position where it could yet pull back into this structure. If we move on to Google, this has also been one of the leaders of the year. Not so much in percentage terms, but it's obviously had a very strong relative strength since it broke out into stage 2 back in May here. So this has been, you can see the Mansfield relative strength broke above the 0 line very strongly as it moved up into early stage 2. It was grinding its way out through stage 1. So the stage 4 decline went on through the majority of 2022 and started to turn back towards stage 1 at the early part in January in 2023. You can see the 30-week moving average was still declining at that point. So this early breakout above these levels here was still too early. You never buy a breakout when the 30-week moving average is still declining. That's one of the no commandments from the method. So wait for this to start to tighten up and start to see the stage 1 base structure developing. So we generally want to use the Wyckoff method entry points and the stage analysis method entry points in conjunction, which is the later part of stage 1 and the earlier parts of stage 2. So in regard to that, you're looking at this kind of area through here is our area of focus when we're looking for an entry zone. So you need to identify that in real time and start to track the stocks as they move into through in stage 1 into the later part, and that's when it starts to get a little bit more interesting and tracking and setting alerts at those levels. At the moment, we've had a continuation breakout in Google in the last month or so, and now this week it's attempting to break to higher highs again, so showing some good strength. Still 10% or so until the 2021 highs here at the 150 level. So at the moment, it looks like it wants to continue towards that. Obviously, no guarantee of that. It's still reasonably early in the stage 2 advance. You can see here we've got 17 weeks, so it's still in just normal stage 2 at the moment, past the first quarter, so past the stage 2A area into normal stage 2, and relative strength still making higher highs as the stock is making higher highs. We're looking at it from a daily perspective. See the shakeout that happened in the first base structure, little double bottom base, and started to move back up. See double bottom breakout there, did retest that and then rebound on earnings, and has since been building a fairly tight base structure on earnings. You can see the relative strength versus the S&P 500 has been rising since August here as this has been going sideways and the market has been correcting. So it's been showing some really good relative strength versus the market, and now attempting to break out to new highs as the market has rebounded back above the 50-day moving average in the S&P 500 and NASDAQ at the moment. Tesla, on the other hand, is came off a little bit more strongly. Didn't see the same kind of relative strength as we've seen in Google recently, but it's still very early in stage 2, so it's further behind than the likes of Nvidia, Google, etc. It only broke out into stage 2 back in the early part of June here, and you can see this is what we call the stage 2B entry point, so the backup entry zone here. So you wait for it to stabilize on the retest of the stage 2 breakout or on a pullback towards the stage 2 breakout level, and then start to wait for the turn. Weinstein only says you need to wait for some kind of stabilization. So the way that you can do this is by using lower time frames. If I drop down to the 195 minute, for example, 2 bars a day, you can do stage analysis on a multiple time frame approach. You can see obviously the stage 2, stage 3, stage 4, then started to build a new stage 1 base structure here. So with the stabilization through this area. This is our potential backup entry zone, and then you can obviously use the stage 2 breakout on these lower time frames, or you can use the stabilization as the backup entry zone. So somewhere between this 230 to 250 area was obviously our backup entry zone as such. So it can really be that simple in terms of the method. So sometimes with different stocks, you might not get a backup all the way that comes back below the 50-day moving average here, for example. So for some stocks, you might only get a move back to here, and then it backs up and makes a continuation from this point. So your backup entry would have been in this zone. So you need to use those lower time frames in order to identify that turn and stabilization. So it can be more tricky of some names, and you don't always get a backup entry point. The very strongest stocks will just move straight into stage 2 and continue on, and won't form a backup entry point. And you'll only get the secondary entry point once it starts forming its first base structure at higher levels. So not all stocks do this, and it tends to show a little bit more weakness in the stock, or that it's still got a lot more overhead resistance. So you can see Tesla, still a lot of overhead in Tesla. It rallied up the initial stage 2 move, so it rallied up into this zone of resistance. If I stick a Ichimoku cloud on this, you can see this cloud, you'll be able to see that obviously it moved up into the zone of resistance and rolled over, and is now rebounding. So it's now in a slightly better position now, clearing some of that older resistance, starting to wear that out a little bit. As I said, if we drop down to the daily chart here, we're in the backup zone. It's not yet cleared the 50-day moving average, back above the 21-day moving average, and had a very strong day the prior day on Tuesday here. Had a 7+% move, and then a tight consolidation today. So we'll see if it can manage to push back through this 50-day moving average and then rebound on any kind of pullback through there. Then that would be very strong in that regard. But at the moment, it's obviously still in a point of contention here. It could still reverse here at this 50-day moving average if we start to see some weakness coming back into the market again. But at the moment, obviously one of the major stocks to be looking at is obviously coming out of that stage 2 secondary entry zone at the moment.